Good morning, traders. It's the 2nd of March. We're Signal Centre talking ball. I'm Joe, joined by Steve. How you doing this morning, Steve?
Yeah, good, thanks, mate. Just made it by the skin of my teeth. I
Yeah.
got a bit distracted with a few bits, which happens when you get old.
Fair enough. Cool. Right, so let's get stuck into it. Plenty of headlines to get through, and then we'll get into the markets. Good morning to everybody watching on the streams. If you've got any requests this morning, any markets that you're looking at, please feel free to post them up. Let us know what you're looking at, and we'll do our best to cover those markets and give you our opinion from a technical point of view where we think the next movements may be headed. So let's get on with the headlines then. And we're going to focus on German inflation to start with, which came in at an increased number of 0.8% higher for February, taking the overall rate to 8.7%, which actually was unchanged. And the consensus forecast was for 8.5. So I was hoping for a dip, didn't get it, which will have dented risk appetite slightly. The Hawkish Bundesbank rhetoric continued. The President Nagel stated that significant increases in interest rates are necessary beyond the March increase. Markets are pricing in a 65% chance that the ECB will hike rates by 50 basis points in March, with the remainder expecting a 75 basis point hike. So potentially some big hikes on the horizon in Europe. Euro strengthened as a result of all of this and the hawkish rhetoric, and also optimism over a rebound in the Chinese economy triggered some euro buying yesterday, especially on the major crosses. We had some mixed US ISM data yesterday. The US ISM manufacturing index increased marginally to 47.7 for February from the 47.4 the previous month, but it was below the consensus forecast and remained in contraction territory for the fourth successive month. New orders and production also remained in contraction for the month, and there was a small decline in the employment for the month. Prices index moved back into positive territory with a reading of 51.3 from 44.5 previously, and that was stronger than expected. US yields moved higher yesterday. Treasuries lost ground after the US data with concerns that inflation would remain higher than expected and force a more aggressive Federal Reserve stance. The 10-year yield increased to near 4% and moved above this level to 6-month highs on Thursday. So that was one of the causes of risk appetite declining, higher US yields, dampening risk appetite and unsettling equity markets amid fears that interest rates will have to stay higher for longer. In terms of what's happening in the UK, the Bank of England Governor Andrew Bailey stated that he would advise caution in suggesting that the central bank was done with rate hikes or that further rate hikes were inevitable. He added that some further rate hikes could be appropriate, but nothing is decided, and he reiterated that the bank is data dependent in decision making. We have some more data today from the Eurozone on inflation. The latest Eurozone inflation number will be released a little bit later on. And the consensus forecasts are for a decline in the annual rate to 8.3% from 8.6%, but the whisper number will be higher. So yesterday we saw that the German number came in line with expectations and it was still above expectations. So maybe we'll see something similar from Europe today. That's at 10 a.m. UK time. Okay, Steve, let's get on with the charts. What's your thoughts on cryptocurrencies today?
Yes, mate. Cheers. I'll share my screen and we'll run through the cryptos and commodities. Let's take a look. We've had a bit of a rejection on the Bitcoin side of things. As you can see, we've sort of rejected from the main resistance up at 25,400, which was a previous support, then turned into resistance and has acted again here quite nicely. We've broken through this upward trending support line also, and we've retested it to the downside. So it's a reverse trend line, and we've also got Ichimoku cloud resistance here. So the rejection here, a little bit of a evening shooting star formation, and breaking down now as we're speaking below the cloud. So on the back foot after quite a nice little rally up that we've had, a nice little bottoming formation. This is the weekly chart that we formed, this like little double bottom here, which played out quite nicely. But there's maybe a bigger correction unfolding here. But the initial signs are that we've rejected from what we're going to call a neckline now, that 25,400. It's just slightly below there, but that's a good reference point. So are we forming a inverse head and shoulders? Potentially. we've got a long way to go to play out. We've got to form that right shoulder, the left shoulder, up to the neckline, down to the head, up to the neckline again. So a really nice parallel neckline there. Potential for that rally if it was to play out. So still a lot of ifs and buts on this. Would be a move up towards 35,000. So pretty key from a technical perspective that breaks higher, and the potential upside is pretty good indeed as well. Ethereum, the levels to watch in Ethereum. Let's go down to the daily so it's a little bit clearer. We've got 1730, and that was again major pivotal level that we've had in the past. We broke up through it on the 16th of Feb and then reversed quite sharply, forming a shooting star candle, and the rejection has continued. With this Elliott wave, automated Elliott wave tool has picked up a fifth and final wave, and we've corrected into the A leg, the B leg correction higher, and then looking for the C leg correction lower. Potentially that'll be lower than the low of the A leg, which is $1,560. So yeah, yesterday's candle looks, or today's candle looks pretty bearish overall. From a short-term perspective, we're trading around the 4-hour cloud, so a little bit of work to do still, but potentially forming a bit of a channel there. Let's see if we can get a little channel drawn on just to sort of highlight what I'm talking about. Nice little parallel channel playing out potentially there. Looking for a break to the downside. Ripple, XRP, similar sort of channel we've got going here. And but we're running into this Ichimoku cloud. We've formed a bearish outside candle on the 4-hour chart, and that's this morning basically. So between 12 and 4 a.m. this morning UK time, that rejection looks pretty ominous. So resistance will be at 38.47.5, and down below the support coming in at 37 cents. So looking on the back foot across the crypto world. Let's take a look at gold. We've seen a little bit of a correction higher over the last 3 days, 3 solid performing days. Today we're off to a slower start. We're trading around about 1832. We got up to 1845 yesterday before prices slowed, and again we're sort of in this fourth wave correction according to the automated chart. There's other we could redraw this and show different sort of like waves that we could potentially be in, but that's what the automated tool has drawn. Let's go with it for the minute. We've had the rally up into the cloud resistance, and then a little bit of a pullback. Obviously gold very much driven by what's going on in the world from a safe haven perspective. It's an asset which is people flood to when there's geopolitical tension or bad things going on in the world, and the dollar obviously the main driver here, and at the moment the dollar really sort of like battering gold about. If we get a stronger dollar, we'll get a pullback. Weaker dollar, we should get a rally. So that's how you sort of like really look at gold on a more high level basis. So price action or levels to watch: 1805 to the downside. This bearish flag that we picked up a while ago had a measured move target down towards 1790. There's also a 50% fib retracement at 1788. So quite a good level to aim for. However, we've got this nice correction going on at the moment. If we see a break of 1823 today, then maybe this correction is dying off. Silver, same sort of price action going on in here. The shooting star candle yesterday, so that's a bit more of a rejection on the silver. And levels to watch here: the support coming in at $20.42, resistance at 21.18. Copper has projected higher over the last 3 days, also really strong. But again, you can see the dollar influence here, where we've had a pullback this morning. We've stalled in front of the previous swing high, so we posted a lower high. So potentially this rally that we've seen over the last 3 days could be coming to an abrupt end. Crude oil has also rallied. We had oil inventories out yesterday. The market moved higher, and we've sort of had two quite positive days overall. Over the last week, we've seen a nice correction higher. We are in a bit of a sort of channel at the moment, sideways channel. One of the major resistances that we've picked up, 77.64, we're trading at that level now. So good to see this, how the price action acts around here. At the moment, the candles on a daily basis are looking a little bit top heavy. Looking at maybe the short-term chart, 4-hour chart, we've managed to break through that Ichimoku cloud. Again, we're sort of like looking at, is this just a corrective channel? In the overall grand scheme of things, we're still pretty negative and pretty bearish. Above, we're trading around the 200-day moving average. We've got a 100-day moving average slightly higher than this, up at 79.90, in front of the resistance at 80.72, which is a previous swing high, and the multi-swing high, where we got the treble top from, if you remember way back then, 82.61. So they're the levels to watch on the upside. Main levels to watch on the downside, 72.58 and 70.21 on the WTI crude oil. Brent crude oil trades at a $6 premium, $6.50 premium at the moment in there, so it's edging out a little bit. And again, we're going in this sideways channel, maybe a bit of a symmetrical triangle going on here, so we'll watch to see where we get the break. Good positive price action over the last week, ran into some resistance, and really sort of like challenging that that 83.97. We're above it at the moment, so that's showing that we've made a new high compared to previously, and maybe a little bit of potential further upside in there. We've got a 100-day moving average comes in at 85.85, and the real resistance at 86.70, and then $89 and below. The major resistance, again, we've got a bit of a trend line going on, so let's draw that in. Let's draw a line to connect these lows. Trend support coming in today at around 80.90, 80.90 there. Natural gas has had a nice little bounce. We've continued. We've had 6 days of positive price action. I was fading this on the gun to head, and that looked good for a while, but then blew up in my face yesterday. On the back foot this morning, but these hanging man candles do make me a little bit concerned that this rally or this reaction higher is running out of a little bit of steam. Maybe I'm just bitter that I was stopped out on my trade yesterday. Anyway, let's move over to the FX, take a look there. Joe's going to show us what the dollar's up to, and then we can dive back into indices after that.
Yep, lovely. Thank you very much, Steve. Okay, let's take a look at FX then. So dollar index. So yesterday we posted a bearish engulfing candle actually. So we can see there the large red candle that played out yesterday. So despite there being a bit of a fall in risk appetite, we actually saw the dollar decline, which is a bit of a breakdown from the normal sort of correlations that we've been seeing, in that when we've seen kind of risk off appetite in the market, that's generally meant that the dollar's moved higher, but that wasn't the case yesterday. But it is on the front foot again today, trying to basically claw back all of the losses that it made in yesterday's session. So for me, it still looks as though it is in a corrective upside phase at the moment, following the break of this short-term downtrend and the break through this resistance level at 103.62. So while above that level, yes, we may see a pullback to test it, but ultimately I do think we are going to see higher prices on the US dollar towards that 106.15 level, which is the 38.2% fib level of this entire down move, which began back in September and ended in early Feb. So yeah, pretty mixed there, but all in all, still I think quite dollar positive. Let's take a look at euro US dollar. We can see here it actually looks quite positive. We saw a break of the trend back here in early Feb. Then prices have consolidated lower within this kind of wedge formation, which we then broke out of on the 27th of February. Nice little pullback to retest that. And yesterday we saw a really strong candle, which indicates that there is willing buyers out there and they're trying to push the prices higher. So we've seen a bit of a pullback today, but we could continue to see upside momentum here. So euro was buoyed yesterday by some positivity coming out of China and hopes that or optimism that growth is going to return in that region, and euro is boosted by that. So it looks as though we may continue to see some upside here. And that would kind of play out in line with that dollar view that we've got, that it may pull back towards that support level that we highlighted just a moment ago. So 108.85 is the level here that I've highlighted in black, where I think the euro could possibly reach against the US dollar. Let's take a look at cable. So this has been threatening to complete a double top for a while now. Price is really just sort of bouncing along this line, which is at 119.19. We've seen a couple of decent reactions from this level so far, and maybe going to get another test of that today. We're down by 0.6% as things stand. And my concern is that we are forming some sort of top here following the break of this uptrend that happened in early February. So we've got these two arrows drawn on here to indicate the potential of a double top. The neckline of this pattern is actually down here at 118.42. So unless that's broken, we have no double top. It's only a potential double top. But if that does then go on to break, so we've got minor support here that we need to consider first at 119.19. Then we're looking for 118.41. And if that gives way, it potentially sets up a move down to 112.36. That would be the measured move of this potential double top. So sterling seems to be struggling a bit at the moment. And if you look at my watch list, you can see that there is a fair amount of red on anything linked to sterling other than against the New Zealand dollar. Let's take a look at Aussie versus US dollar, see what's happening there. So continuing to move lower within a corrective phase. It's trading within maybe some sort of channel or wedge formation. Yesterday we saw a pretty positive day, engulfing all of the previous days' losses that we saw, which weren't a lot. It was a couple of doji candles that we've posted, but we're on the back foot again today, almost pretty much at the opening point of yesterday's trade. So if prices continue to drop, then it brings this 50% fib level into focus, which is at 66.64. We've got some support levels around here as well. So it looks as though potential for more downside there, which would be suggesting that dollar is going to move higher. Let's take a look at New Zealand dollar, US dollar. So that's broken out of a nice little wedge formation. It looked as though it completed a double top pattern on the breakthrough support at 61.91 on the 24th of February, but prices then found support very close by at the 38.2% fib level, and this is a really strong candle yesterday, so indicating that there is maybe a bit of risk appetite here because there's been money flooding into the New Zealand dollar. So some really mixed signals out there at the moment, which is making trading quite difficult. So any pullback today, you would hope, if this is going to stick, would be limited to somewhere around here, around 62.07. If that is the case and we see new buying interest emerge, then maybe we'll continue to see prices trade within this range for the time being. And being at the lower end of the range, quite decent from a risk reward perspective. If you're looking to buy at the lower end of the range, targeting the upper end of the range, risk reward looks quite favorable on that basis. Let's just visualize that, shall we, on the chart to have a quick look. So you'd go with a stop below the low that we posted on Monday the 27th, and maybe looking for a move towards the upper end of that range, and you're looking at about 3.6 to 1. So that would be very nice indeed. One to watch maybe. Let's just finish off with the majors before we get onto the requests. Let's take a look at dollar yen. So that's continuing to stall at the 38.2% fib level that we've got highlighted here in blue, following the break of channel and the breakout of this wedge. We've seen a couple of indecisive days prior to today, but we're on the front foot, attempting to try and break through this level. If we can get a close above that, then again, that would be supportive of the US dollar and suggest that higher prices will be seen. And the next level to watch will be that 50% fib level up at 139.58. Dollar Swiss quietly going about its business, grinding to the upside following the break of this channel. The 38.2% fib level in focus here at 94.75, so that's looking pretty good. Dollar CAD, as mentioned, this has been pretty choppy and pretty range bound. Arguably a bit of a bottom pattern formed here, but prices into resistance at around 136.82 to 137.00. So quite choppy there as well. Okay, had a request to take a look at sterling Oz as well as sterling yen. So I will get to these now. Let's take a look at sterling Oz to start with. So as we've already spoken about, the sterling pairs are on the back foot today. I've been basically thinking about this head and shoulders pattern now, what feels like for a while on sterling Oz. And yesterday it really kind of tested, well, the last couple of days, it's really tested that resolve because it was challenging what I proposed was the right shoulder of this pattern. and then formed this really large reversal candle. So we can see prices took a move through that resistance at 79.60, failed to close above it, posting that shooting star candle. So that's a pretty clear indicator that a reversal is maybe set to take shape. And we saw some follow through to the downside yesterday and on the back foot again today. So I'm thinking maybe we're going to see lower prices here, potentially towards this kind of zone initially at 174.79, which is back around the neckline of this proposed head and shoulders top. So I'm not ready to invalidate this just yet, but yeah, looking pretty bearish for me at the moment, and anything linked to sterling is not looking particularly healthy. So we've got comments from Andrew Bailey a little bit later on today, I believe. So oh no, that was yesterday, wasn't it? Sorry. He mentioned that he will be data dependent with regards to his next steps with regards to interest rates. So yeah, sterling on the back foot for now. Let's take a look at sterling yen then, because that's been requested too. So we spoke about this yesterday. Ali has requested this a few times. So obviously Ali's got an interest in this, and we saw that there was potentially a break to the upside occurring here on Tuesday, but we rallied into a 61.8% fib level and again posted a shooting star, closing back below this short-term downtrend. So that's a pretty negative sign. Yesterday we posted a doji candle and remained below that downtrend, which suggests that maybe the sellers are trying to take control here, and that could end up with prices pushing lower. So there are multiple supports in here that were previously resistance. It's all starting to get a little bit messy on this chart, so maybe I need to clean that up a little bit. But yeah, seems to be stalling into this resistance here, which was when a top pattern completed. We can see this big dynamic of an impulsive move lower. We rallied into that level. We've overshot it, but only as far as that 61.8% before posting a pretty impressive reversal candle. So maybe looks as though this has run out of steam in the short term, and maybe the opportunities are now on the downside. Again, try and visualize that. If you're going to trade it on the short side, you probably want to have a stop above that high from the 28th of February, and then maybe targeting a move back into this sort of area of support. So from a risk reward perspective, about 2.2 to 1 on that basis. Of course, you can try and refine that by using the intraday charts. Okay, going to leave it there on FX, Steve. Can you run us through some indices?
Yeah, sure, mate. The indices aren't looking great actually this morning. We've woken up to a little bit of a headache overnight after quite a decent rally yesterday. Starting with FTSE, we rallied off the support level at 78.50. Nice reaction high yesterday, almost forming a bullish outside candle. But overnight, we've just had a real smack back down to reality. We've opened up at 79.40. And we're down at 78.90. So on the back foot on the indice front. DAX pretty much the same. Germany 40. We've broken down through the support actually. Although FTSE's holding, we've broken down through this 15,000. What's the low today? 15,145. The support was at 15,187. So a really sort of like deep correction we're getting out of here, and in the sort of like from an alleyway perspective, potentially in an A leg of an ABC correction. And also we got some real crucial levels in the Dow and the US markets. Let's take a look at those. Potential for a decent double top here. This is obviously, these are like really good formations to look for when you do sort of get this corrections from close to all-time highs. And we've the high here, this is the neckline here, as we highlighted, 32,441, and then another high not far away from the previous high, and the neckline, if we do manage to break there, and remember the 200-day moving average just below here on this chart, that's coming in at 32,392 with potential to break that, which it has done actually in the Nasdaq. So we can see Nasdaq on this chart, it's showing we're in a fourth wave correction. I was looking at this more closer term impulsive move higher which means we're in a sort of like the deep correction already from a fifth wave, a shorter fifth wave than the chart showing. But anyway, we have broken down through the 200-day moving average, which acted as support both on the 24th and of Feb and the 1st of March. But we're broken down aggressively below it and on the back foot. We have got further supports down below, more moving averages, but this is a really negative European start to the European session, and maybe we'll get some follow through this afternoon. Who knows? S&P has done the same. We've broken through the cloud on a daily basis as well. So I'm negative on all US indices at the moment, but the Nasdaq and S&P seem to be running away from the Dow. We had this 200-day moving average acting as good support again. Now we've broken through it. We're on the back foot. We're also through the 100-day moving average, which was looking to cross over below the cloud as well. Support levels below 3,900 we've mentioned. I think we were looking at there was 3,700. Oh, that was a little while ago. Was a good support level. It's 3,765. That's the one we're looking at really targeting. But in between that, we've got 3,885 on the S&P. Yeah, so overall, feels pretty bearish. EU 50. I'll look at that because this is one I sort of like was trying to short up here the other week. We got this really nice, strong, bearish engulfing candle on the 24th of Feb, and that seems to have dominated. And we're looking to really sort of like take out this support, which comes in at 4,171, only 14 ticks away, and we're looking for a deep correction towards an A leg, then correction B, and then C. So ABC correction we're looking for on this, but really got to overcome the hurdle of support at 41.71. So I'm going to be looking for a sell trade idea in the indices. Am I too late? Have I missed the boat? Are we actually sort of like stalling in front of this support and about to bounce? That's the beauty of the market. I'll only be able to answer that tomorrow, but I'm going to have a go anyway.
Okay, lovely. Well, let's just run through what Steve's referring to. So this is the gun to the head challenge where both of us pick trade ideas live on the stream. We've got real money on this now. So we are risking 1% of trading capital on each of these ideas that we come up with. We've got £2,000 in our trading account. Well, we did have £2,000 in our trading account. That's what we started with. We are slightly down from where we began, but confident that over the long run, taking a consistent approach towards trading, that we will be able to turn this around. The ideas that we come up with are placed at market, and they will expire at 9 p.m. UK time or when the stops or the targets are hit. As a minimum, the risk reward ratios on these ideas must be better than 2 to 1. And we have a go at this every day, same time, same place, and just pick whatever market we feel in that moment is going to produce a bit of a return for us. So if we have a quick review of yesterday's ideas, not a lot to really go through here, but we were selling dollar yen. No, that wasn't yesterday, was it? I didn't do that yesterday.
No, did you?
I didn't refresh it. Right, I was selling Swiss franc versus Japanese yen, looking for a bit of a top pattern to complete here. It was a bit speculative because it hadn't completed the pattern. Was hoping that would play out. I think at 9 o'clock, I was ever so slightly offside, actually, 0.13R. So it hasn't really run away. It certainly hasn't reached the stop. So I might even have another go at that today, just because I've already got it set up and good to go, and it's still valid. So Steve, you were looking for a dead cat bounce in, or you suggesting that we've had a dead cat bounce in natural gas, but that continued to move to the upside, I believe. So only by a little bit. You were stopped out though, sadly.
Yeah.
But still potential for that ABC leg to play out. I mean, that just suggests that the fifth wave is maybe a bit higher, right?
Yeah, potentially. But I'm not going to go with that today. I'm going to look for something else.
Okay.
Yeah,
Fresh
I feel
ideas
like
coming up then. What are you going to do?
well, I feel like the indices have just sort of like bottomed out very slightly on the short term. So I think we're due at maybe a little bit of an intraday bounce, and then maybe look for a better levels to sell at. So I'm going to ignore that. But the one market that does sort of like grab my attention is silver. We've got a bit of a down moving silver going on, which has been going on along with gold. We had a bounce on Tuesday from a low of 2042, which we talked about. Shooting star candle posted yesterday, and we've had a bearish move today. So is this going to continue? For me, the two short-term trend indicators I look at are the Ichimoku cloud on the hourly and the 4 hour. We're below it on the 4 hour, so we're in a bearish trend. We're below it on a daily, we're in a bearish trend, and we're breaking down below it on the hourly chart as well. So this is the one I will use. I'll just grab this over here and bring across, because I know that should line up with the 9 o'clock close. So breaking down below the cloud currently. So I'm going to go for a similar risk reward, 3-to-1 risk reward, if I can manage to get it on. Let's see if we can. So I want to sell this at market, take profit, stop loss. I want to risk 1%, which is around 1854. As you know, our account down here, 1854. So that makes sense. And that puts my stop up at $20.96, which is not far away from this swing high here. So that's quite a nice level to have the stop. So I'm just going to press sell, and it does it. So that's me in the trade. I just have to adjust this slightly to marry up with the trade idea, but I'm targeting a move down towards 2036 or 2037. That'll gain £55 from that. I'm risking £18.55.
Okay, good luck. I'm going to revisit Swiss franc Japanese yen actually. So just going to again go through the reasons why I did this yesterday. So this is the daily chart. We can see it's in a downtrend. We can see that there's been a decent correction from these lows into a 61.8% fib level, at which point we posted this candle on Tuesday, which is a bearish outside day. So we posted new highs and then closed below the lows of the previous day. So that is a reversal candle. The fact that it's come in line with trend resistance and a 61.8% fib level gives me a lot more confidence to have a go at this on the downside. If we take a look at the intraday chart, so on the hourly, we can see yesterday's trade on there was looking for a short-term head and shoulders top to form on the hourly. So we're going to move this along to now fit with today's setup. So if we look at the price action in the last hour, we can see that an engulfing candle is potentially forming. We've still got 25 minutes to go before that's actually confirmed. But we have found some resistance here. Let's get rid of that black line because it's no longer relevant. So 145.27 is where the resistance is. So I want to give myself a little bit of headroom just to try and hang on to that trade for as long as I can. So I'm going to go with a stop at 145.25 today. The measured move of this head and shoulders top is, although it's only a potential head and shoulders top, I must stress that because it hasn't completed the pattern. It needs to get below these levels here around 144.41 before it does. Risk reward on that basis is around 6.5 to 1 today, with a target at 142.53. I'm also buoyed by the volume point of control. If we scroll back to the last 20 days, we can see that's pretty much at the current level that we're at. So there's obviously a lot of price action that's taking place in this level. This may control the price, and therefore we could see a slide down to this next kind of big volume node, which is all the way down here, very close towards my target. And also, if we take a look at the Elliott wave count on the hourly chart, the automated Elliott wave count, we can see that we've completed 5 waves up and now appear to be in this ABC corrective leg lower. So providing we don't move above that B leg, where I've suggested is the right shoulder, then this has got potential to play it to the downside. So that's my trade for today. So Steve, selling that at market with a stop at 145.25.
Targeting
142.53.
Okay.
We all on?
6 to 1. Yep, that's in. That's in.
Superb. Okay, so there's 2 trade ideas. Let's have a look at the day ahead and what we can expect from the economic calendar. So there's a couple of things out today, but then it really starts ramping up over the next week or so, where we've got lots and lots of information and data coming out that's going to be quite pivotal for the market and potentially create a lot of volatility. So 10 o'clock today, we've got the Eurozone consumer prices. We've got ECB minutes at 12:30. So that will be very important for anything linked to the euro. And then at 1:30 UK time, we've got the US jobless claims number, which is obviously a weekly data point. Pretty much all these data points are live at the moment when considering the Federal Reserve's policies. So tomorrow we've got the ISM Services Index following on from the manufacturing numbers that we had yesterday. And then next week we've got policy decisions from Australia, Canada, Japan. That's pretty much it on the central bank front, but we've got non-farm payrolls, we've got the Canadian employment data, we've also got a Fed Chair Powell testimony thrown in the mix as well. So lots happening next week. We would need to be on our guard and approach markets with caution. So that's it for us today, Steve, unless you've got anything further to add.
No, that's all good, mate.
Excellent. Well, thank you very much for watching, everybody. I think there's been a few issues with the stream, but I think if you just keep clicking that refresh button, it should come back up. Thank you for watching. Thanks for participating, and we'll see you again tomorrow.
Lovely. See ya.
Bye-bye.